Welcome back, everyone. Michael here with Offshore Citizen. Today I'm going to go over the Portuguese Golden Visa fund option. So for those of you who aren't familiar, the Portuguese Golden Visa, fantastic program, one that I definitely recommend as one of the easiest paths, more straightforward to getting EU citizenship and giving you residency along the way, is an option where you have basically three ways. Okay, there's some slight variations, etc., but three ways. You can buy real estate, you can invest in a fund, or you can invest in bonds. And I've normally talked about the real estate option here. To me, the bond option is just ridiculously bad because bonds are just a terrible investment, combined with the fact that you have to put up a bunch more money. But the fund option is an interesting one that I've had a number of clients go through lately, and I think is one that is worth paying a little bit more attention to because it's a little bit more complex, it can be a little bit more opaque. However, it could potentially have good upside, etc. So we're going to dive into that today. Before we do, if you haven't already, please smash the subscribe button, nail the notification bell. Really appreciate your support. Make sure you hit the all notifications thing. And I try to produce great content for you every day, so feel free to go back and check out. We've got lots of videos on different tax planning for various different countries, residency programs around the world, citizenship programs, etc., as well as kind of international tax basics and asset protection basics, etc. So go check out all that stuff. If you'd like help with any of these topics of relocating internationally, where to live, how to set yourself up, or setting up your company internationally, again, how to stay in your home country and optimize for whatever your business is, please reach out to me. You can book a call, calendly.com/Michael-Rosmer. Link in the description below. We help you with both the strategy side and the implementation, forming companies, opening bank accounts, getting residencies, citizenships, etc. So yeah, please reach out. You can check out our websites, offshorecitizen.net, offshorecapitalist.com. You can send us a message there. Again, links in the description below. Okay, let's dive in. So normally, for those really quick recap, there's three different real estate investing options. There's 500,000 euros that can be done in key areas, Lisbon, Porto, etc. These are ones that they're changing. They're changing the program at the end of the year. So there's kind of some urgency around that. Further out, you can invest 350,000 euros. I don't think that's a bad idea for a lot of people. Then you have 280,000, which I've done a separate video on, pros and cons of that. You can go and take a look at it. The other option that you can do is you can invest in a fund, 350,000 euros, okay? And these funds have a mandate where they have to invest at least 60% into like Portuguese companies, Portuguese assets, etc. And they stretch the gamut. Now, when I first heard about the fund option, I was somewhat concerned. And the reason is, I think when you buy real estate, and this is part of the reason I probably talked more about real estate than the other options, it's very clear what you're getting. It's very clear what you control. Kind of the risks are in your hands, etc. Right? I buy a property. I know I own the property. Right? When in doubt, I own the property. Maybe the price goes down a little. Maybe it goes up a little. Maybe I have bad tenants. Maybe I decide to live in it. Maybe whatever. I kind of understand what's going on there. Yes, it's more complex to buy. It's more complex to maintain. It's more complex to sell. Right? We're going to cover that in a second. This being said, from a security standpoint, I know if I tell clients, hey, listen, go and buy this property, they're probably going to be safe. They're going to lose money, not going to lose money. I want people to be in a situation where they don't lose money. Ideally, they make money, but at least don't lose money. Okay, so that's the thing that we would start with. The funds, therefore, the problem is, I've just seen situations all over the world where people have lost money investing in funds, things that look secure and then turn out to be 100% losses. So I've spent quite a lot of time doing due diligence and connecting with most of the major funds in Portugal and going through them in order to try and do the assessment based on everything that I've learned over whatever period of time, I don't know, 15 years or something, of these types of investments. To identify the risk factors and try and say, okay, this one I don't like, this one I do like. Now, they all are regulated and licensed, so that's sort of a good thing. They have auditing requirements, they have somebody who's breathing down their neck, etc. So some of the concerns that I would have in various other parts of the world, or at least various other funds, are not so concerning to me. Okay, so that's good. This being said, there is still plenty of spectrum for rope to hang themselves with, and so I wanted to dive pretty deep into all of those things for myself before, I would be interested in doing the project or investing in the funds, and also, before suggesting or connecting anyone of my clients. So I think that's important. Now, These basically take three combinations. Okay, so there are like what we'd call venture funds, companies basically where they buy companies or they invest in companies. Okay, so that's the first. The second are real estate, so ones that are buying real estate. The third are a blend of real estate and venture. What's interesting, I think, about if you're looking at the real estate versus buying the real estate directly is a few things. Number one, the fund is allowed to invest in places like Lisbon and Porto, and so you can get exposure to those markets based on a smaller investment. Okay, so you don't have to put up 500,000 euros, you can put up 350, but yet you can get exposure to that market. And I think this is relevant because of the fact that when you're talking about investing in markets outside of there, your challenge to me is liquidity, meaning there's just not as many buyers. You know, when you have low liquidity, it allows for greater volatility in the price. It creates potentially higher time horizons if you want to sell. So when you're in Porto or Lisbon, there's enough buyers that you can sell fairly quickly. The pricing is going to be more predictable, etc. So I like that. Okay, so I like the idea that I can get exposure to those markets through the fund, even when I can't buying real estate myself. Number two is I do like that there's a certain degree of diversification. Okay, so that's useful. If I'm in a situation where one property goes bad, we have bad tenants, or we get some vacancy, etc. There's other ones that make it up. So there's kind of a leveling effect that has a certain value. Now, that can go both ways, because if you have a really great property with really good tenants, really well managed, etc., of course, any one property can outperform a variety of properties. Okay, so that's something to consider. The third thing that I like is, frankly, that I just don't have to deal with it, right? Somebody else is going to go find the properties. Somebody else is going to manage the properties. Somebody else is going to sell the properties. So that's good. The third thing that you can get is you can get these blended funds that are partially kind of the private equity VC type side, and you can get and combined with the real estate. So there's a variety out there. Some of these funds I think are terrible. Okay, I was just like, get me away. I don't need to waste any more time with these guys because these guys are terrible. Some of the things that I look at when I go through. So first of all, I want to look at just investing fundamentals. How do they invest? All right. For me, if we're talking about real estate, this means buying for below market value. Okay, so show me how you're getting real estate for a good deal. Number two, I want to pay attention to the cash flow, because to me, cash flow provides security. It also provides me a rate of return as an investor, which is great. Okay, that's good. But at least it's going to give me this. Third, I want to understand kind of the types of properties you're buying, etc., and therefore the exits. Then brings us over to the venture side. Now, my concern on the venture side is Portugal is a very small market. Some of these funds are 100 million, 200 million euros, and there's just not that much to invest in Portugal when you're talking about looking for good deals, right? So some of them, what they've done is they've invested in foreign companies and helping to bring them into Portugal. Okay, it's kind of like a gateway to Europe sort of thing. That's an interesting philosophy, right? Interesting approach to take, and there's some merit to that. Of course, there's also added risks. It's also more complex, etc. So you're trading higher upside for higher downside. That's kind of a personal preference thing. If we look at that, again, we have kind of some of the same fundamentals, but we're focusing more on what's the growth, etc. Now, my concern with, well, there's lots of concerns when it comes to companies, because lots of companies fail, right? And one of the things that I think is interesting about looking at funds in general, as well as especially these deals, is if you think about, when I got involved in the angel investing community, like 95% of these deals are going to go to zero, and yet they all sound good when you're pitching them. So how do you dive in and figure out what makes the most sense? And so that's definitely a more complex decision on the company side than it is on the real estate side, okay? Next, I'm paying attention to things like leverage. So one of the things that I've seen kill deals many, many times is basically what goes on in terms of leverage. Good news, they're regulated. They can only do typically 50% loan to value, and often they're lower, like 30%. So this, if you're buying cash flowing real estate, this makes a reasonable degree of sense, right? You can boost returns. The reality is today you'd be kind of crazy not to use leverage when you have such low interest rates. If you can lock them in over time, etc., that's good. So there's some benefits in that regard. This being said, it's something that I'm always cognizant of, especially if there's no cash flow. Okay, so to me, cash flow can kind of take away some of that risk. If you don't have the cash flow, that's a little bit concerning. Next things that I'm interested in alignment of interests. So basically, I want the people who are in charge to have their interests aligned with mine. There are some funds out there that do not. Okay, some of the funds I look at their structure and I'm like, oh boy, like this is, I want nothing to do with this, because there's no incentive for them to do a really good job. I want people who like are going to hold themselves to a high standard. They do a good job, therefore they get rewarded, and that's a win-win. Okay, very, very important as far as I'm concerned in all investing. Third, some of these funds have not just been set up for golden visas, they've been around for a while. Prior to that, they manage money for key people. And so I do pay attention to co-investors, right? Co-investors to me are an investing indicator. If there's basically sophisticated, smart people who are investing in these funds or having their money managed by this fund manager, then that's a good sign to me, okay? Next, I'm paying attention to financial controls, okay? So one of the things that I've seen go bad in funds in various parts of the world, I would be a little bit less concerned in Portugal because of the way that these funds are regulated, but that being said, it still is something to consider, are cases where you have one person who has the power and they can basically go and use it as their personal piggy bank, right? Not a good thing. And you can get, I've seen some just terrible stuff happen over the years. So I want to understand the financial controls that they have internally in order to have decision making in terms of spending money, etc., so that they're not going to basically take and waste my money. This being said, I think there's some great funds out there. There are some that are going to give you better returns, right? And there's some that are a little bit safer, that are maybe less good returns, but hey, they also take a lot of headache off my shoulders. So that's worth considering. So for example, it's pretty normal in Portugal to get, I would say 3 to 5% per year return, which is not a high number, but is comparable to what you'll get in a lot of the real estate as well. So that kind of fits similarly. And then you have back end upside. So on exit, they're expecting some sort of appreciation, which is often quite a bit more than that 3 to 5% for what period of time. These funds are typically set up for 7 years, 8 years. So you'll notice that this is longer than the Golden Visa period, right? The Golden Visa period is 5 years. Why is this? This is because of the fact that they have a subscription period when people are investing, which could last 1 to 2 years. Then you would have those people's Golden Visa period, which is 5 years. Then you have some period of time afterwards, which is kind of like flux for while you're getting permanent residency, citizenship, etc. You want to have that, you don't want to basically end up too short, right? So some of the funds actually go to 10 years, or at least have the ability to go to 10 years, but usually you're looking at 7, 8 year periods. So be aware your money is going to be tied up for that time. Again, some of them are paying you cash flow in the meantime. I think that's perfectly good, not a bad way to go at all. And yeah, so basically that's kind of a summary. I think kind of in conclusion, to me, for a lot of people, the fund option is actually the best option, okay? If you're going to move and live in Portugal, that's a little bit different. If you're buying a house for yourself, okay, great. Like, then you're gonna go and live there. If you're somebody who's sophisticated in, say, real estate investing and you wanna do it that way, then by all means, go and do that. If, on the other hand, you're somebody who's saying, hey, listen, I really want the visa. I don't actually want to live there. I don't want the headaches. I want my money safe. I wanna get a rate of return, and I want it to be easy. Then I think some of these funds, again, some of them are terrible, some of them are, I think, quite good, then that's one way to go. There are some that you take on a little bit more risk and you have potentially higher returns. I would caution you, highly, highly caution you, not to think too much about what they say about their past returns. There's one of them in particular that I'd talked to, and they talking to me about their high returns over the last couple of years. It's like I was meeting with a private banker a little while ago, and he was telling me about the high returns over the last year. And I'm like, dude, it was 2020. Like, my brother did amazing returns last year too. It's not anything to brag about. A monkey throwing darts at a board did high returns last year. That's not anything that's impressive. It's over a long period of time. How does that play out? So anyway, I hope that's helpful. I hope it gives you some idea of what might be out there. If you have questions about it, please put it in the comments below. If you want to go in and specific, you're like, hey, listen, I have no idea how to do this due diligence, because I do recommend that, then reach out to me. Happy to help you, happy to kind of direct you and point you in the right direction, etc. And if you'd like help with any of these other subjects, again, please reach out to me. Happy to book a call with you and kind of work you through your situation, see if something is right for you or if there's some other option, etc. And if you have any other questions, put them in the comments below, give the video a thumbs up, share it with your friends. Really appreciate your support, and I'm going to look forward to seeing you guys on the next video.